Hey all, welcome to ShareTreck. This is Raj here. Friends, I've been reflecting a lot on what's happening to my Tesla stake. I had invested a good portion of my portfolio in Tesla, and I have diluted it since, but I have booked a lot of losses, and I still have accrued losses which I have not yet booked on Tesla because I still have a decent amount of holdings. Of course, I had distributed my risk, so I'm not that distraught, but it has been terrible. And then I'm looking at all our investors, subscribers who are asking about Caribou, Bluebird, Ginkgo Bioworks, and PACB and all that. So I know I'm in the same boat. I can feel your pain. So today's video is for you. Please watch ahead. Let's get started. Welcome back, friends. I've been a Tesla investor for a while, and it's been a roller coaster journey to say the least. Recently, however, the ride has been anything but thrilling. My holdings in Tesla have taken a nosedive, and I can't but help feel disillusioned and let down by Elon Musk. Instead of focusing on the job at hand, steering Tesla through these troubled times, he seems to be distracted, caught up in ventures like Twitter and SpaceX. And now Twitter is being named X, and he's doing all kind of crazy things with it. To top it off, he's asking for an enormous pay package, which feels like a slap in the face of investors who have lost a lot of money. Investors like myself who are watching their investments crumble. In response to this downward spiral, I have had to make the difficult decision to dilute my Tesla holdings and book significant losses. This isn't just a financial hit. It's a blow to my confidence in a company and a leader I once believed in. Next, we have Cathie Woods' ARK ETF. Is it a falling star? Adding to my woes is my growing concern about Cathie Woods and her ARK ETF. And I know many of the viewers of this channel are Cathie Woods fans, and they got into genomics because of Cathie Woods and all her stories about how productivity will grow up, and she's picking up winners and all that. And she has a video coming up once in every while explaining her analysis, which sounds very credible, but her ARKG ETF is not doing well. ARKG is not doing that well either. Once celebrated as a visionary in the investment world, Woods' portfolio is now riddled with massive losses. And of late, you might have heard news reports saying that she sold Nvidia just before it took off, and she lost a huge opportunity. And where did she put the money? She put it in Tesla, and then Tesla went down. So here are the 10 largest losers within the ARK ETF, according to data from Cathie Woods' website itself. So the first one, which is a pain point for me also because I have a small amount of Ginkgo Bioworks. In Cathie Woods holdings, the initial price of Ginkgo Bioworks is $9.99. And its current price is, drum roll, 66 cents. And today I saw it in the high 50s. So it is down almost 93% overall. The next one is Teladoc. One of our viewers is asking me, Raj, why don't you cover Teladoc? You haven't made a video on Teladoc for a while. So its initial price was 163.91 in Cathie Woods' portfolio, and currently its price is around 11.43 or something like that. It's down 93%. Then, of course, we have Pacific Biosciences, which was bought at an initial price of 19.84, and the current price is below $2, showing around 90% drop. And if you look at the other holding they have, which is 10x Genomics, I have covered 10x Genomics a couple of times at the request of subscribers. And I can say that subscribers are influenced by Cathie Woods, so they are asking for these companies. So anyway, the initial price of investment was $153.19, and its current price is below $25, so it's down almost 85%. Then we have Unity Software Inc. Initial price was $104.43, and current price is just around $20. It's down almost 80%. And then we have Verve Therapeutics. Initial price of investment was $28.17, and currently it's down below $6. So it's almost a drop of around 82% or 80%, something in that region. Then we have Zoom Video Communications. Initial price was $278.55 when Cathie Woods invested in it, and its current price is $63.12. That's almost down 77.6%. And then, of course, Roku, initial price of investment was 243.88, and current price is below $60. That's almost down around 75%. And of course, we have UiPath Inc., which was invested at 62.44, and current price is around $19. It's down almost 68%. And then we have Intellia Therapeutics. Initial investment price for Cathie Woods was 62.04, and the current price is 24.67, which is almost down 59.9%. These staggering declines in these stocks make me wonder whether Cathie Wood, much like Elon Musk, might be losing her touch. Her aggressive investment style, once heralded as innovative and forward-thinking, now appears to be precarious and high risk. And of course, there are people, when somebody is down, they kick them. So I have read comments saying that you could throw a dart at tickers and then invest them, and then you still do better than Cathie Woods. But anyone can throw stones when somebody is down. But the ARKG ETF's performance has been disheartening. ARKG also has been disheartening, and it's making me wonder if my faith in these high-profile figures have been misplaced. And in conclusion, I think I would say that some of my investments have been marred by disappointment, Elon Musk's lack of focus and exorbitant pay demands, coupled with Cathie Woods' faltering ARKG ETF. They have shaken my confidence on the so-called stars or rainmakers. This experience serves as a cautionary tale. Don't be swayed by fads or allure of high-profile figures. It's crucial to do your own due diligence and thoroughly research before making any investments. Only engage in high conviction deals where you have a solid understanding of the company's fundamentals and long-term prospects. And that's the reason why, friends, I keep on going into the therapies that they have, how the therapies work, and what is the disease, what is the market size of the disease, who are the competitors, what is the current state of care, and how does the new therapy compare to it. I do all those things because we have to understand more about the company, its fundamentals, and its long-term prospects. Informed decisions are the key to successful investments. And with that, my friends, I would like to ask you to evaluate your own investing strategy. Why did you buy, say, Pacific Biosciences? Or why did you buy Caribou? Or why did you buy Ginkgo Bioworks? Where did you hear it from? What convinced you? Go back to that video where someone recommended it. And that's the reason why when anyone asks me, should I buy this share at this price or should I sell this share? I always tell them, you know what? Do your own due diligence, do your own decisions. I'm here sharing my thoughts and my ideas. I'm not saying follow my ideas. I'm just saying reflect on it, because as a retail investor, I never got insight into how other retail investors think. So I've created this channel to show you how I think as a retail investor. I do very few transactions in the year, maybe 20 or 25 transactions in the entire year, and I make a decent profit in whatever transaction I do. Most of the time I leave my holdings intact. So that's the thought process here. Please let me know what you think. I'll catch up with you in the next video. Bye for now.